Hello and welcome back. This is Christopher Aaron. It is December 20th, 2024, and it is time for a gold price 2025 forecast. This is going to be the last broadcast here for the year, and it is time to look ahead to 2025. So, buckle in and let's get to it. Make sure to hit the subscribe button, and if you're watching on YouTube, the bell icon to be notified when these videos come out. If you have a moment to give it a thumbs up, I would very much appreciate it. It does help out the algorithms here. Last but not least, on Twitter, or X as it is now called, we have a free feed at iGlobalGold where sometimes I post quicker updates for free when I don't have a chance to post on YouTube. So, let's get into the 2025 forecast. We're going to do it in the most logical way possible, which is to study the price action above all else. Now, gold is in a very interesting spot here. It has been consolidating for the last number of months, but I want to show you what I'm seeing as far as support on the gold chart. Okay. So first, follow with me back here. Notice after the initial surge in the beginning part of 2024, notice the series of reaction highs that gold began to make in this region just below 2,450. Notice this reaction high here. Notice this reaction high here. So notice how all three of these highs were lining up. And then notice once gold broke out here above 2,500, notice how this series of reaction highs then what? Acted as support. And then once again, this very same line, all we do is we extend it out into the future, support once again. So, for whatever reason, for every reason, buyers are showing up on a visible trend of support. Could it be central bank buying coming out of China and India? Yes. Could it be some institutions, some funds beginning to move their money into physical gold? Yes. Could it be all of the above, something that I'm not even aware of? Yes, in fact, it is all of the above. And so since we cannot know, since it is humanly impossible to know all of the buyers who are showing up to cause this, what we can do, however, is we can take the sum of all the buyers and we can observe where the sum are appearing. And they are appearing along a quite visible trend here that goes back to April. Okay, so right here on this trend, if we were to follow this trend, it's interesting to note that this trend would now come in at the $2,550 level if it were to be tested today. It hasn't been tested here since October, but here we are. It would be 2,550. Now, the other interesting level that the market is respecting right here is this level that you can see I've highlighted in the gray. This is the 38.2% Fibonacci retracement of what? Everything following the breakout. Following the breakout here in March, clear horizontal resistance going back to 2020. Following the breakout to the most recent peak, the 38.2% Fib retracement comes in at 2,518. And remember, these Fib retracement levels are levels that appear in nature over and over again. They appear in the spirals of hurricanes. They appear in the spirals of seashells. They appear in galaxy formations when we look at outer space. For some reason, the universe has focused on these levels, especially the 38.2 and then the 61.8 retracement, as a level that markets and nature tends to key off of. And so you can see here, 25.18, notice this bounce right here hitting both the line and coming to just within a few dollars of this 2518, this 38.2% fib retracement. So in sum, we have two separate levels that the market is keying off of for support within what? A $32 swath from 2,518 up to 2,550. And so anytime you have two separate support levels that are both valid at the same time, it's important to recognize both of the levels and to remember that they are both acting as support, and therefore it is going to be a little bit of a zone of support. Sometimes it's not one specific number, but it's a zone of support. Okay, so if we look at the zone of support here, 2518 to 2550, and then we say, well, where's the resistance? The resistance is still rising as well. If you go all the way back here from early 2023 and you notice the trend of resistance, the sellers like this through the most recent peak, what we have is this kind of shape. It's basically a diamond shape within a rising trend. Above support, below resistance. It's a rising pattern. What? Until proven otherwise. Until proven otherwise. And it would take weekly closes below this zone here to prove us otherwise. So, if you're part of our premium subscription, you will know that there is very intense selling pressure appearing at 2,800. And you will know the reasons why for that. I'm not going to discuss those right here. I'm going to stick with the intermediate term 2025 forecast. And that is for gold to remain in the zone above 2518 to 2550 until proven otherwise. And I could see it playing out like this here for the next several months, consolidative, and then it's going to be basically getting into the first and second quarter of 2025 that the market has its opportunity to do this. It has its opportunity to break the 2,800 level to the upside. It's not guaranteed, though. That resistance above 2,800 is quite significant for reasons that we have been getting into in our premium subscription. So, this is the forecast for gold for 2025. Above support. Support is valid until proven otherwise. It is a rising pattern until proven otherwise. And the chance for gold to break above the key 2,800 resistance is going to come in the first half of 2025. And we can begin to speculate as to what all those reasons might be that gold might have a chance to break out. Could do with an expansion of the war in Ukraine and Russia. Could have something to do with the U.S. election. Perhaps some of the cutting of the power of the Federal Reserve. It could be all those reasons combined. Maybe a black swan event. But the chart is setting up for the possibility of a breakout in the first half of 2025. And remember, the support is 2518 to 2550 unless proven otherwise. If you would like to go deeper into the type of videos that you have seen here, but looking at that resistance at 2,800, we've been talking about that for our premium subscribers, not only covering physical gold, but also physical silver. And at this time, we do have a divergence between physical gold and physical silver, so our premium members are aware of that. We also include the gold and silver mining sector, Bitcoin, the U.S. stock market, and all of the buy signals and sell signals that we are using for our gold and silver miners. You can find that the last update was an hour and a half. So you are seeing a portion only of that here. Make sure to check out Precious Metals Intelligence Plus if you would like to dive deeper into your understanding of the charts for precious metals. In our service called Elite Private Placements, we allow higher net worth investors to invest in gold and silver miners at even better terms. And the reason for that is because if you can invest the minimum, which tends to be around 7,000 US dollars per investment, you will receive free warrants. Yes, free warrants with every single investment that you make. And that gets you nearly twice as much upside compared to buying the same gold and silver mining companies in the open market. And you will also receive a free subscription to our flagship PMI Plus if you join us in the elite private placements. Last but not least, if you'd like to sit down and discuss your situation, know that I do consultations with individuals just like yourself, whether you're brand new to the precious metals markets or whether you have decades of experience and you are looking for a researched independent perspective. You can book the consultation right on the website. We are going to be closed. Our office will be closed for this holiday week, the Christmas week coming up, and then we will be back to start off the new year. I will be speaking at the Vancouver Resource Investment Conference coming up in late January. More information on that when I get back. Last but not least, I want to wish you a Merry Christmas, Happy Holidays. Enjoy your time off if you can take a little bit of time away from work. And I will see you in the new year. Thank you.